TGIF Warriors, how's everyone doing?
Morning, Dale.
How are you, Ryan?
Hey guys.
Yeah, all good, mate.
Everyone
Hey,
doing
Gregor.
okay? Yeah, everything's good. Metal's still chopping around. So let me ask the crowd here. Who had a good week? I see Jay's called this break on cable, making EG explode. Who had a good week? Anyone up 1% on the week? Give me a Y. Alexander, you up 1% on the week? Hugo? Great. You know, if you were up one, who was up more than 1%? Hugo? Well, Hugo, have you taken the assessment for prop accounts? You could have been there, almost there in a week, if you weren't down 4 or 5% prior. Okay, so if you're getting that kind of performance, you're starting to prove it to yourself. You may have to adapt it a little bit, but just think about it. If you had been signed up for the assessment, you'd almost be there. If you spent $250, you'd have 25 live to trade. Anyway, so think about that when you're having good weeks and you put a few together. You know, I've had people ask me, I said, well, you know, let's see you do it before you give it a shot on the assessment. But if you're starting to do it, it's not just a shot in the dark, okay? So metals are still chopping around, chopping lower. Pretty ugly week in gold. It's actually, I think, a 2-week reversal if we close under 45. So that looks like that's going to happen. Silver was even worse. Silver went right to that real important level here, 24. And if we take it out, there's problems. And the other descending triangle that, you know, still has a way to go is crude. Still doesn't look that great to me. A home run ball in Euro pound. So, you know, that's one thing. And we brought it up that although Euro made a new low on the ECB a week ago, Euro pound didn't. And I think Peter made a comment about Euro Swiss was not making new lows with that too. So we're not getting a 2-week reversal in Euro. We needed 83. But, you know, I'm sticking with it. You know, when you turn after a major advance or decline, it takes time, and there's it'll grind you out. There'll be retests. You'll think it's starting to move in your direction. It comes back. You really have to be patient, and you know, it takes time to turn around a battleship, right?
Yep.
So what are you thinking here, Ryan, going into the long weekend? Are you already thinking about BOJ next week?
Yeah, I'm really struggling to get my head around what's going on in FX markets at the moment, particularly today. I get why, you know, look at the pound wire cables crapped out. You know, IMF yesterday saying the UK might suffer the most from inflation and the hit to the consumer. And they teed that up because today we got bad retail sales, we got bad consumer confidence numbers, we got more Brexit messing around. So I can understand why it's been poleaxed like it has.
Yeah.
But then this morning we saw, you know, I think yesterday or the day before, we saw yields dipping, you know, across the board, Europe, US, wherever. And we saw a dollar bid. That happened today. Then the next minute I looked at it, the dollar still bid and yields have bounced.
Yeah.
There seems to be a bit of a disconnect. You know, it's like, Dale, when you're trading, you like to know which way the wind's blowing. You like to be in the market, and I don't feel I'm in the market. I don't feel I know who's doing what, where it's going, and when I lose that feeling.
You and K-Man nailed the bottom in USD one.
Oh, K-Man was on it. Yeah, I was in it. Then I got off it. He got back in it, and he's ridden that horse. Yeah,
huge,
great trade. Great trade there.
So I read something that people were just waiting for the wand to kick in like this because of its relationship to the yen. or what the yen was doing, that the yuan was next on board for something like this?
Yeah,
And
potentially, but it was just do nothing. Even while look at what the yen did, and the one did nothing. So this has sort of come out of the blue. Good trades are all about timing, aren't they? And if you're sitting in it, you get the runners, and if you're not sitting in it, you watch the bus leave without you.
That's the toughest thing for most people, myself included, is sitting.
Yeah.
So exactly. This was the bottom you guys called, and then it went just into a consolidation period. But this must have been what, Monday, Tuesday, that big breakout.
Yeah, then it all kicked off. Euro dollar's interesting. We had the break of 108. I said a lot of eyeballs were on that, and we had the break, but it came over that Easter weekend. The days when we're not at full power market. So this move is a bit more interesting down to 108 because there's a lot more people involved in it. Calling it a hold for now down to 107.90. But if we close the week under 108, I think it looks a bit dodgy.
Yeah. And next week or whenever we get back over this blue line, the 109.40 level, that's going to be an indication, I think, that
if we get if we get a quick move back to there, then there's a high chance it breaks, and maybe that's something to look for going with a break trade. Maybe about 109.50 something, 45.50. Try and see if you can get a runner above the level.
Hey guys, good morning.
Hey,
I'm sorry to chime in. I'm a couple of things. First of all,
don't ever be sorry to chime in.
Well, if you got, most of the people in our community know I'm dealing with a couple of personal things today, so I just wanted to chime in really quick. And if you don't mind, I wanted to show you something. But I think Grega is joining us today, so he's gonna want to come in and he's gonna give us an Elliott wave view of the markets. Which for those of you that don't know or don't practice Elliott waves, or it's not something you really do, I'm going to pass this back over to you, Dale, but I'm going to take it really quick. I wanted to cover something real fast. For those of you that don't practice Elliott wave analysis, this is going to be a great opportunity for you to talk to Gregor Horvat. He'll go over some markets with you, and I think it's going to be an important view going into this weekend. But I wanted to talk a little bit about the French elections this weekend. Ryan, or actually, I guess, I think Stelios is probably here, and, all of my partners are here. What do you guys have any views on Le Pen, Macron this weekend?
Well, if I may,
yeah, please.
If I may say, what I do is I compare the last elections to these elections, and we have the kind of very similar situation. Only this time, the gap. What happened last time was the gap was very narrow in the first round, and then everybody got together effectively against Le Pen, and Macron won quite convincingly. The question we need to ask ourselves is this trend going to change? Because on the first round, the gap between Macron and Le Pen was actually bigger than last time. So do we think that this kind of getting together against the far right is not going to happen again? I don't think so. I think we're going to get the same result. And if you ask me to put a percentage to it, I would say I don't like putting big numbers out there, but I think over 90% chance that Macron wins again.
Okay.
Unless people think that the people have turned and they really, really hate the establishment now, let's call it that, and they want to try something different, if you can call Le Pen different, then yes, we might have a surprise. But I don't see what's going to cause that.
Okay.
If you remember, Blake, I said it since before even the first round. For me, it was a non-event because even if Le Pen won the first round, it would be marginal. And second round, everybody outside her voters would go with Macron. So I was very confident about that even before the first round. And as Stel said, now having seen the first round, in my opinion, the 90% Stelios gives is very conservative. I think it's like
and one thing,
98%.
Our friend Alexander says, I thought that on Brazil and see what turned out there. Well, France is a very socialist
Yes.
country by for decades now. So for them to turn far right,
yeah,
it will take a big thing. I'm not saying it's impossible, but I just think it's a very, very
nothing is impossible, but it's a very, very remote probability.
So okay, and I appreciate all you guys' feedback, and that's what I really wanted to hear, because I'm gonna take you guys over to, we've had a look at the euro. We know where the euro turns bullish. It turns bullish above this 109, 50, and really we got to get above this, like this blue trend line that you see here. But that's not exactly what I'm looking at today. I'm gonna take you over to the dollar index, and I sent this out to, if you're a ForexAnalytix subscribers, just, I just want to show you this, that, your updates, you can see all of the, basic analysis updates that went out this morning. Those are usually myself. I'll come out early in the morning, in North America, and I'll start updating the platform. But I actually sent this out today because I wanted to sit here and explain this. You can see the dollar index actually just rallied back towards the highs. Now, we actually hit the all-time highs, I'm sorry, most recent trend highs, near the 101 level just today, this morning. And you can see it's rejecting. I would venture to guess that we're not going to break above that ahead of the weekend. That, that's just, obviously, an assumption, not thinking the market's going to put itself too far out there ahead of the weekend. But I know exactly where the dollar index turns into a melt up type of situation. And that's going to be above today's highs. If you think about that, like the euro, if the euro is breaking down, which, has it's 57% of the dollar index, if the euro goes into meltdown mode below, 107.50, it's because of the French election. That's going to be the catalyst that drives. It's going to be there's no way Trump can win. Oh my God, he won. There's no way Le Pen could win. Oh my God, she won. It's not, it's pretty binary as far as I'm concerned. Macron loses, we could really see the euro going into, getting slap mode, and then the dollar index just goes into major rally mode. Because if you look at like the sterling, broke through 130 today, and the only reason why we're not breaking through channel support right now in the sterling is because the euro is probably not going to be breaking down yet today. But going back to the dollar index, the dollar index above these highs, we go into melt up mode. You look at the Aussie, the Kiwi, they've all cracked really key levels of support overnight. And so the catalyst would be, I would assume, the weekend. But if you guys are looking for a dollar reversal, I think it's pretty clear, because if you look at the dollar's price action just this week, we rallied, and this is a 4-hour chart, but I've obviously zoomed out, so I'm going to zoom back in here. This is this week's price action. This is a reversal from the 38% retracement that came in at 99.80. If we get below that, or you can say to this week's low in the dollar index, that's going to be a catalyst to drive us, what Dale, you so commonly refer to as a throwover pattern. That would be a throwover pattern where you have, the dollar index, or, an asset come out of a channel, false breakout, and then, strong reversal the other direction, which is entirely possible if the dollar breaks this week's lows below the 99.70, support. Anyway, I just wanted to map this out for you because I think it's very clear. The dollar and FX markets are very clear at this point. I'm not saying I can guarantee you I know which way the market's going to move, because I don't. I mean, we can all make our assumptions based on what you think the election results are going to be, but it really, like I said, it's going to be more of a binary event, coming out of this weekend. I can make my assumptions what I think is going to happen, and I'm along the same lines as Steve and Stelios, but I've seen some weird crap happen over the last few years, and politics is, and I know we all have. Politics is one of those that I don't think you can safely bet on one, outcome or another. We are living a very tumultuous time, and it's hard to, I don't really want to underestimate, any one side is what I'm trying to point out. Anyway, and I think the dollar and the euro, for that matter, and the FX market is very clear. But I will also point this out. In the event that you see a dollar melt up, let's say you see a European election be upended where we didn't think was even possible, you're going to see the dollar really rally, but it's probably going to be on the heels of a massive move lower in risk as well, which is just going to accelerate the move higher in the dollar. So I'm going to throw that out there. I wanted to throw it out there. As you all know, I'm dealing with some personal things, so I'm gonna bolt off today's F.A.C.E webinar. But I just want to say thank you all for your continued support. We're going to have Grega is going to be in. I know Stelios, Steve, and Ryan and Dale have a whole lot to talk about for the next 15 minutes. So I'm gonna bolt on out of here.
You do
and
that.
pass it on over to you. All right, thanks, guys.
I hope
Bye-bye,
everything
mate.
works out, Blake.
Have a good day.
Cheers, thanks.
See you
Thanks,
next week.
guys. Well, one thing I wanted to point out before Gregor comes on, or whoever wants to say something, we have some sterling weakness today, and main reason was that we got some retail sales numbers which were horrible, and also PMIs which were also disappointed. So you're seeing a general trend in the UK where the economy is really fighting to regain, to get any momentum. And remember, the Bank of England, they want to be hiking a lot more because inflation is going higher. So they must be aware that with leading indicators slowing down already, they're going to do damage to the economy. They know that. So they're caught, like most central banks, caught between a rock and a hard place. They have to be hiking because inflation is going rampant, but economy is already turning. So what do you do? Good question.
Sorry to be anal and repeating myself again and again.
You anal? No, never.
Yeah, just
Steve's a technical analyst.
Yeah, exactly. Just a clarification. I've said it before. The central banks have been doing huge damage to the economy for many, many years. Right. The real damage is that, in essence, they've allowed an economy that isn't viable, and that is why it is an economy that, once you start getting rates to historically lows until a few years ago, that's considered to be like a huge headwind for economic growth, right? That is not how a normal economy should be. So the real damage is not that they're raising rates now, which they have no alternative anymore. The real damage is they nurtured an economy that cannot withstand normal financial circumstances to survive. That's the real damage central banks have done.
I agree 100%. Yes. Anyway, so that's what I wanted to say about the UK. We, like Blake said, ahead of the French second round, well, the French elections, basically, I don't think we're going to see a huge move in currencies, but there is this risk, potential risk for the euro if Le Pen wins, which I think is unlikely, but if she does, then the euro is definitely going to suffer. But
not going to happen.
Let's wait and see. Yeah, let's wait.
It's all about knowing your risk. If you know it, you won't be shocked by it. So even if it's small, I think maybe if Macron, is confirmed, we might see a little 10, 15, 20 pip open on Monday, a bit higher, just as a sort of relief. But like you guys say, I don't think it's not going to rocket up 80, 100 pips on that result. And if it is, I'll probably be a seller.
Yeah.
Indeed.
Not sure if Dale's about. You had some.
I am. I'm
I hear Gregor.
Yeah, I'm here. Yes.
Bring in the Greg stuff.
Yeah. Let me do the screen share. Someone has to stop.
I will. Go ahead. Can you guys hear me?
Yeah.
We can hear you just fine.
Oh,
Yes,
okay.
yes,
I
yes.
thought I was talking to myself. Okay.
No.
A lot.
That's not one of these times.
Okay. You don't know how much I, want to tell myself to shut up when I'm talking to myself. All right. Dale, be quiet.
Okay, so yeah, I mean, dollar index is definitely at some very important levels here. Timing is also quite interesting. We are seeing euro dollar coming into very extreme oversold conditions. I mean, sentiment is very at extreme pessimism. So I think that it can be quite interesting period for upcoming reversals. I mean, I agree with Stelios, like he said earlier this week, that euro will at some point surprise, and these reversals may not be far away. And when I'm looking at US dollar index, still, I think that this 78.6% is quite interesting and important. We are also at this swing highs back from 2020. And at the same time, what I'm looking at on the 4-hour chart is I'm still tracking and observing this 5-wave recovery, and I'm seeing a divergence. And usually this divergence is very common whenever we are tracking fifth waves. So I think that there is a very strong resistance not being far away. I'm still tracking that wedge pattern that I talked about on the euro last time. Of course, there is a room for 106, 107. Definitely, I'm looking for another low here. As long as we are below this upper trend line and 109.30, I think that there is room for another leg down here in the short term. So maybe early next week we see another leg down, but then I would be very careful and just be prepared. If we get a bounce, I would be prepared for reversals here. Of course, it's all depends on the 10-year US notes as well. This market is still moving sharply to the downside, not seeing any kind of lows, but we are in a fifth wave of decline, maybe even some wedge here, which could be telling us that bears are losing strength. So maybe some supports here could give us the reason why dollar could turn.
Risk off?
Yeah, for now it's still a risk off, but let's see if this risk off will continue. I think that regarding the stock market, I think that this could actually stay trapped in the range, that we will not see any significant breakouts yet. What I'm looking at is actually a triangle still. So for now, yes, there is room for risk off. Here I'm looking actually at SPY. I'm looking for, let me look here on this chart. Okay.
4,200.
Yeah, around there. Yeah, I have the 78.6% of the previous 5-wave rise. The 61.8% is a little bit higher, obviously. So I'm looking for this range to be triggered in the near term. But then I would be looking for potential price stabilization here. So I really think that this whole look from the highs is still corrective. Okay, I don't believe that we found a major top here. I still think that this fourth wave could be a little bit more complex. Of course, I'm aware of 4,000 to be very important level. It could be triggered, but I would not be looking for any significant top. I just always like to be prepared that market could always continue higher, because no one expects that stock market will continue higher. That's why I think it's something that we should still keep an eye on it.
You have a count on the yen now, Grega?
On dollar yen?
Yeah.
Yeah, sure, I have.
Of course. It was a rhetorical question.
Yeah, what kind of a question was that?
Yeah.
Do you have a chart on everything, Grega? Yes, of course I do.
Dollar yen is still, I think it's still in a fifth wave here. So I think that we should be aware of potential pullbacks. Maybe intervention from Bank of Japan could be a trigger. Definitely.
Or just the short-term reversal in yields itself can do the trick there.
Yeah, I mean, yesterday we have seen new lows on notes, but interesting, dollar yen hasn't printed the new highs here. So here I have.
Okay. Yeah.
So if this trend line here is broken, right, then I think that maybe we are already headed at least into minor correction. So 125 is then the first support. That
definitely not the place somebody should be chasing the yen higher.
Yeah, of course not. of course not.
The USD
Now,
yen, I mean, of course.
Let's take a look on Aussie. Now, Aussie is quite interesting. I was bearish for the last 2 weeks or so. And here is still the chart pro that is the most important, at least for me. Here at the bottom, we have Chinese yuan versus the US dollar. Yeah. So I'm looking at and seeing a very massive breakdown. And I think that this is something that will have and still have a strong impact on Aussie bears as well. We're just trying to break this bear flag. So it depends how we close today, but it really doesn't look pretty here for the Aussie. So I think that there can be more weakness, especially if commodities were also quite down for the last few sessions. I think if copper can follow to the downside, this Aussie could be much, much lower. Even gold, if we look on gold here, firstly, here I will look at the basic technical. I'm looking actually for potential head and shoulder stop here. Not the perfect formation. Because
yeah, how would that justify a right shoulder? I mean, symmetry is completely, out of the window, right? I mean, there isn't even
not in price, but sorry, not in time, but there's a perfect correlation, at least in price. Okay, so there was a very nice similar distance compared to the left shoulder when I'm looking at the right shoulder. So even if it just maybe try to ignore the head and shoulders pattern, okay, I'm looking at this because I know that my Elliott waves also suggest and that we could be headed lower. So if I have even maybe head and shoulders, which is not perfect because markets are not in perfect shapes, whatever, that this could confirm the idea that yes, we could be headed lower. So from that perspective, even if you just focus on those channels, you can see the lower channel here, parallel line at the top, it was a perfect touch right here at the 2000 psychological level. Then you have this upper channel again,
broken
parallel at the top, right again at the 61.8%. So back then I was looking this to be a perfect resistance, but as you know, it's not resistance until you see a response from resistance. So we have seen a very nice sell-off, very nice broken trend line, and I think that we could see much more weakness. In fact, this drop on gold actually began, as you can see at the bottom, I have dollar versus Chinese yuan. Yeah. So when this Chinese yuan started to break to the downside, that's when actually gold stopped. And gold silver ratio here in the middle is just accelerating higher, just confirms the bearish metal field. So I think that gold could be headed below 1900, but then next week, in the next few weeks, maybe 1840 is the area that I'm looking for. Now, if we look also at the Elliott waves structure here. So here I'm tracking a big wave 4. It can be triangle, okay, an ABCDE pattern, or it can be even a flat when you have wave C moving all the way back to the ending point of that wave A, which is at 1700 below that level. So in either case, in the short term, I think there can be more weakness for this third leg of decline within wave C, back into this pivot area here around 1800, 1840, as I said. This could be an next potential support. So for now, I think that gold is staying bearish here.
Yeah, I agree with you. I mean, I was saying yesterday in the morning edge that in my opinion, gold and silver are currently in some kind of a messy kind of pattern. So the best thing to do is stay away from trading them. Now,
in the short term, yes.
Maybe. Yeah. I think, I'm only looking to trade them higher because, that's where my long-term bias is. Yeah. But at the moment, the technical picture is so messed up, a lot of choppiness. So yeah, within that, I think in the short term, we can really see more weakness. I'm 100% with you. Gregor.
Also, let me take a look really quickly here at Kiwi. As you know, we've been also looking to the downside on Kiwi since we spotted this wedge here 2-3 weeks back. And looks like that there's still a room for more weakness. I'm looking all the way back to retest those lows. Okay.
Corrective move.
That rise, yes, was corrective move. So I'm looking.
No, what about the move lower? What do you expect it to be?
Impulse. But actually, of course it's impulse. Because
oh, sorry, I just realized you're on the 4-hour chart. I meant for the whole move lower that we had since the high. Do you think it's a corrective
that's a
move?
corrective, yes.
Yeah, okay.
So I'm looking for very important low maybe to be triggered and a reversal higher in the second part of this year. I see a lot of markets that could potentially bounce in the second part of this year. We are down on stocks, on cryptos since start of the year. So I think that this sentiment, even if just temporary, it will shift probably in the second part of this year. I have also, if anyone is interested in, probably you, on Bitcoin, I'm looking here at a very big consolidation. So it can be here on Bitcoin, on cryptos in general, can be a very big fourth wave still ongoing. But in the near future, I think that there can be a retest of this 35,000, 33,000. Why? Because notice that here.
Yeah, that's what I want to say. The last move lower looks impulsive to me, and this rebound higher looks corrective to me.
Yeah, exactly. So that was a 5-wave drop away from the upper channel parallel line. You are now in a corrective phase, and if stocks will continue to the downside, as you can see yesterday, the same move. So everyone who thinks that cryptos will continue higher because when stocks are down, because or gold is down, the money will flow into cryptos. Well, it's not the case. I mean, cryptos already topped in November and December, well before S&P 500 came to the downside. So I think that this more sell-off, more risk-off will just drag this Bitcoin and cryptos in general much lower, because it's said plenty of times so that I cannot imagine someone to stay in cryptos who are very volatile and put a risk there while they are pulling money out of stocks and maybe some other much more stable assets. So that's my view.
Thank you, Grega. Nice.
Thank you.
Okay.
Grega.
Yeah.
Since we have you here,
we don't have a webinar interview.
I guess no.
Oh,
you're our guest.
Oh, you're our guest. Okay, since we have you here,
Okay.
the $1,000,000 question. What's up with crude oil? What kind of a corrective pattern do we have here, basically?
Well, on crude oil, I mean, I still think that there will be a major top, maybe already forming here. It's not very clear here on the intraday basis. But what is my real concern here is you can see that I'm looking at energy sector here, okay, and there is a massive divergence going on, right? But there was always a perfect top. Whenever you look back, you will see that both made a very nice top formation whenever we have seen a sell-off. So now it's not the case. So I'm very concerned about the crude oil here because of if this energy sector is really at a strong resistance, then you know that crude oil is going to see break lower. So yeah.
Doesn't this recent pattern look like a triangle to you? I mean, the one we have in crude oil here.
A descending triangle, right?
Yeah, I mean, it can be, but what...
wouldn't that imply one more high?
What worries me here is actually that...
Yeah, exactly. This count that you have over there.
Yes, but this back in April printed a new low here.
So an incrementally new low, yes.
Yeah, so maybe that could be a wave 4. However, what is showing me the intraday picture is that we could actually rally next week. Okay, and I will show you why here. Okay, so this is what I'm looking for. Okay, try to ignore those labels. Okay, so let's assume that maybe this was a free wave drop, moved to a new low. What I really love about the price action here when it comes to trading is that we probably clipped a lot of stops here below 94 at the new low here, and then market rallied, and it rallied very sharply and impulsively. So this price action, this breakout, and since is telling me that we are either going to stay sideways or even bullish. But since the rally was impulsive here, I think that there can be more upside. So I'm looking at $97, $98 per barrel as a potential support for next week, from where I would be expecting a retest of 110. Invalidation level would be at 93. So in the short term, I'm looking higher. Longer term, I'm not sure if this is the high that will stay in place.
Draw a trend line from that high. Yes, that one.
Yeah, very nice.
What do you think about that?
Yeah, bullish.
Yeah, that's my point. I mean, since the trend was clearly higher, I'd rather give it the benefit of the doubt that we might have found a low and we might be headed higher.
Yeah, so I agree, but this 130, I'm not sure. It's so far away. It seems so far away, but as you know, we can be very quickly back then.
Especially under current circumstances. I mean, with all that, geopolitical risk and inflation running rampant, crude oil has proved that it can actually master some huge moves, right?
Yeah.
I mean, under normal circumstances, the distance we have from the multi-year high seems huge, right? But if you adjust for the volatility we've recently seen, that's not that far away.
Yeah, exactly.
Hey, Steve, what do you think would happen if Putin's still raking in a lot of money on oil? Do you think eventually Europe will bite the bullet, even Germany, and ban Russian imports?
I think if they keep pushing their luck, they will have to do it because there are big political pressures in each country. You know what I mean?
Like they're financing genocide.
Yes, because you can't at one hand call Putin, a killer, a war criminal, etc., and as long as he's going forward with it, keep buying crude from him. You can do it for a period of time. Yeah, exactly.
Yeah.
So I do think that if the situation does not de-escalate one way or another, yes, they will be forced to do so because there is going to be a lot of political pressure, for them to do it. And you know how politicians are, right? I mean,
could that spark a rally to retest the highs?
Of course.
Okay.
Of course.
I think that's the elephant lurking out there. I mean, what everyone's seen on their television screens, it's going to be harder and harder for politicians to, just go along with the current program.
Of course, but a lot of people have to also realize, right, that you should completely ignore what politicians are saying, right? Look, for example, many governments are claiming, price of energy is like the cost of Putin's war, right? Yeah. And you go back on the chart, you see where crude oil, for example, was pre-invasion to the Ukraine, and look at what kind of a rally we had up until that point, and you realize that, yes, obviously, the war played a role post that, and it was like the cherry on top of the cake, right? But basically, we've had a massive rally in crude oil a lot before that happened, and mostly that's the result of the huge damage that has been done to the economies due to the COVID measures and inflation, right?
Yeah.
Which was the side effect of printing unprecedented amounts of money for such a long period of time. So basically, yes, it did play a role. But, the biggest factors for what we're seeing have nothing to do with the war. And unfortunately, they're still with us, and they will be still with us, even if tomorrow something magically happens and there is a sudden de-escalation, which, hopefully we will have, and peace in Ukraine. So people should not lose focus on what the real issues are, right? And war is an issue, but the biggest issue underneath all these price pressures don't have to do with Ukraine, right?
Okay. All right. Anything else you guys want to cover today on a Friday? Any questions from the community?
Let's see.
Maybe you have a request.
If we have any questions for you, Greg.
I think there was ASEAN.
Yeah, we also have a question about the NASDAQ.
Okay, so ASEAN, I mean, it's really a very nice clear 5 waves up here from February. So again, similar like I talked about dollar yen, I think that there can be some retracement coming, and I definitely would not be chasing here. In fact, on the lower time frames, we came out of a triangle here. Oops. We came out of a triangle, meaning that that was a final push within a higher degree trend. Yes, and now it's a very nice turnaround. You know, everyone tries to trying to play at a breakout of this triangle here, but then since it's the final piece of this higher degree trend, well, the market does the opposite. And especially when you have such a strong sell-off, you can see that this move actually came to the downside with the S&P 500 yesterday, obviously. So it's accelerating. So if stocks again will close today, it's Friday. Usually when you see stocks closing at the lows on Friday, we can expect Monday to be the same. So it's risk off. And I think that this Aussie yen could actually be much lower next.
And by the way, Grega, many of the yen pairs have a very similar structure at the moment, right?
Exactly. All of them,
Yeah. I mean, some look a little bit different, but the general story is that we've had extended moves higher, which seem to have lost momentum and possibly breaking lower for some kind of a corrective move. And given the strength of the move higher, I mean, even a corrective move lower can be of decent size, right?
Yeah, exactly. And there can be opportunities. I mean, if this ASEAN would make 5 waves down, and let's assume that S&P 500 futures here goes and revisits this swing lows from February, I think that there can be some very nice opportunities on the short side after bounce, actually, after rallies. So
somebody's asking, and that's actually a good question, because according to how I have my charts drawn, cable is testing today very key long-term descending channel trendline support. So somebody's asking about the cable, actually. So I don't know if you've drawn the same channel on your charts, but yeah, you have, from what I see, at least in the second chart I see there. Yeah, there we go. Yeah. So the question is, what happens from here?
Yeah, I think that there is room for 1 to 6, 1 to 7 levels, but there I would be looking for potential completion of this move. I mean, again, notice that current drop is coming out of a triangle. So the same story. Moves out of a triangle are usually very sharp, and those sharp moves will try to pull in a lot of traders who are looking to play the breakout, who think that new major move is happening, but usually they are too late. So
sucking them at the wrong time.
Yeah, exactly. That's what I'm looking at. So of course, it depends how they manage their positions. I mean, there's still room for 1 to 6 is set, 1 to 7 is a perfect support, but usually I don't chase the markets whenever we are at the new low. So because moves out of a triangle are either C waves or are fifth waves, and those are final in a sequence. Of course, there can be some extensions, but I'm just aware and prepared that whenever we see this 1 to 7, that there can be some rally, and the next bounce it's not expected actually from a lot of traders. So that's why I want to look for.
Speaking of which, nobody asked about it, but I know that they keep asking for it on the morning ads. What do you think about Euro Pound? Are we building some kind of a base here? We keep bouncing again and again from an important support area.
Yeah, we should ask Stelio. Stelio is long, isn't he?
But bounces keep failing soon after they begin, again and again and again. So what do you think is happening here?
I think that, again, even this market is at very important support. We can count 5 waves down here that was from September 2020 highs. This was a wedge, and we are now again trying to break out of this channel. Okay, so it was the first attempt here back at the end of March. We came back into this channel now, again trying to make a higher swing low here. So I think that there is a chance actually for this market to rally. I'm not
okay. There is also a channel, by the way, if we want to talk about technical analysis, there is also a channel you can draw from A, black A.
This.
Yeah. Yes. Let me see. I have it on the 4-hour chart. Let me see.
We are looking here at the daily.
Yeah. If you go to the 4-hour chart, there is a channel on the daily as well. I have it starting from like, let's say, mid of April.
Mid of April.
Yeah.
That was a low on April, a higher swing low here. You can be even seeing here potential
mid of April of 2021, right? Mid-April 2021. Yeah.
Yes.
Okay. And now take the support line.
Let me. This one.
Mm-hmm. So this is, a rough channel I'm looking at as a, longer term look, because to be honest, I wouldn't trust. I mean, so many people I've seen having been burned, trying to be long again and again and again at every little move to the upside, right? I would only get somewhat enthusiastic about the upside if we break through this trend line resistance.
So you're looking for 0.86 breakout.
Lower than 86 it's currently at, but yes, I think that's going to really open the upside, right?
Yeah, I hear you. I mean, but here on the big picture, the very important are probably these levels here. I mean, we were testing these levels a lot of times, and always we have seen a quite nice response. So again, it appears that market respects this level after attempting to form a major breakout, but we again are trying to stabilize here. So if that wedge on the euro that I showed earlier would really play out, I think that this one could actually be much higher later on.
We had somebody asking about the Nasdaq before. I know that we had a look at the S&P, and obviously, their fate is going to be similar, right?
Take a look if I have Nasdaq here.
Nasdaq, which, by the way, with yesterday's move, sliced through the 61.8 of the last move higher.
Nasdaq is bearish.
Mm-hmm.
I mean, here looking at the daily, okay, so here it appears to be like a 5-wave drop.
Mm-hmm.
Maybe here even an ABC flat.
And more weakness.
What's probably the most important is that this substructure also have a 5 waves down. Okay, so you have higher degree 5 waves down, smaller degree 5 waves down. So all impulses, whenever they are to the downside, okay, it tells us in which direction market is most likely going to go. So in my opinion, I think that there can be more weakness coming. If we go for our chart, okay, so that's the 5 waves down that I said. Or maybe that's still 4. That's better. So very strong resistance here at 14,300.
How do you consolidate the two outlooks, though, between the S&P and the Nasdaq? And although,
yeah, I mean, Nasdaq is
fundamentally speaking, I do agree that in risk off, especially with conditions changing, and I've said it multiple times before, the Nasdaq should underperform the rest of the indices because it's literally an index that is full of all these quote unquote growth story stocks that, you know, were benefiting hugely from the insanity of monetary policy that we've had for so many years. So now that monetary policy is reversing, the Nasdaq stocks that benefited the most should be the stocks that suffer the most. But still, I don't believe that the Nasdaq is going to be moving lower and the S&P is going to be posting new all-time highs. I think that's impossible.
Yeah, that's impossible. But I think that it's possible that Nasdaq retest these levels, but the S&P 500 actually will come just close to this level. So in either case, I think that even this market can be in a corrective phase. On a higher degree, it can be an ABC drop. And we bottom, let's say, around 12,000, around there.
Okay, but in any case, you see decently more weakness.
Yeah,
in the Nasdaq ahead, and obviously the Nasdaq is technically also a preferably short in comparison to the rest of the indices.
Yeah,
the US indices, I mean, of course.
Yeah, of course.
Okay, thanks, Gregor. So I guess we can wrap it up here, Dale. What do you say?
Thanks, Gregor.
Thanks.
Appreciate you.
All of you have a wonderful weekend. For those of you that celebrate Easter this Sunday, meaning you're Orthodox, have a great Easter
holiday.
or a holiday or whatever they wish those of you that follow religion.
Solemn and happy.
Okay, yeah, that.
All right. And,
no, there is a morning edge. There is a morning edge. Somebody's
there's a morning edge. Okay.
Yes, of course, of course, of course.
Okay,
we'll be there in 25 minutes.
And guys, think about it. If you're starting to be consistent and you're getting about 1% a week, you're steps away from the trader funding program. So also, if you haven't tried our service, take the trial at least and check out the, I believe one of the strengths is the chat rooms and all the camaraderie and great traders in there. So everyone have a great weekend. I have landed a great guest, Steve. You're gonna like the Fed guy. Will be here next
sounds
Friday.
Good already.
Yeah, so he worked at the Fed for 9 years, I believe, and we'll be able to grill him because the Fed will be a week away.
That's going to be.
I just wanted to chime in. I'm sorry, I'm here, but I'm not really here. But yeah, he's going to be a great interview, Dale. I'm super excited for you to bring him on.
Yeah, Pedro helped me get him.
Oh man, that's awesome. He's going to be a fantastic interview for everybody to listen to.
Yeah, and it's right in front of the Fed, and we'll see. He'll tell us. I'm not sure what chairman he worked under. I'm assuming that it was Powell, and who knows, could have been Janet too. But looking forward to that. So everyone have a great weekend. And Blake, if there's anything I could do, let me know. And love the team and love our community and think it's the best out there. And I know that we give it our best every day that we're here. So have a great weekend, everyone. Enjoy, recharge your battery, and we'll get them again next week. Adios, everyone.
Bye-bye.
So see you, K-Man. My account's set up there.